Just so you know who to blame, in this video I'll be talking about the 4 major causes of the next economic crisis in 2020. Stay tuned. Hey, what's up? It's Magda from Crypto Masters. Hope you're having a fabulous day so far. If it's your first time here, don't forget to subscribe and hit that bell notification button just so you don't miss out on anything. So there's this guy called Nouriel Roubini. He's worked for the White House, he's worked for the US Federal Reserve, he's worked for the International Monetary Fund, and even the World Bank. You know, you name it, he's done it. He's got some pretty good insider knowledge about how the mechanisms of these institutions work. Now, back in 2008, he predicted the economic crisis. His prediction was so damn accurate that people dubbed him Dr. Doom. Well, guess what? He's predicting yet another crisis, one that will hit in 2020. And, you know, since he's got such a track record, I guess the least we can do is listen to what he's got to say so we can kind of cover our backs as much as possible just in case, and just to remember what the primary causes for this situation are. He's saying that a major financial crisis will hit in 2020, causing severe global recession. The first cause is the fiscal stimulus policies that are currently pumping the annual US growth rate. Basically, they're unsustainable. America has been on a roller coaster of fiscal stimulus since the 2006 economic crisis. Now, what this means is a reduction in the level of taxation and an increase in government-funded benefit packages. That's basically what these fiscal stimulus policies are all about, encouraging public spending and supporting economic growth. But by 2020, the stimulus will run out. And because the stimulus was so badly timed, the US economy is overheating and inflation is on the rise. This in turn is forcing the Federal Reserve to continue increasing its interest rates. Now we can expect a 3.5 federal funds rate in 2020. And as the USA is no lonely island, these inflationary trends will also hit other key economies, and other central banks will follow the US Federal Reserve's footsteps. Cause number 2 is, apart from the toxic fiscal and economic cocktail, we've got the sanctions that Donald Trump is imposing all over the world. The Trump administration trade disputes with China, Europe, Mexico, Canada, and others are escalating. You know, these policies are leading to major global trade wars. The administration is restricting inward, outward investment and technology transfers. This is all causing interruptions in global supply chains. It is restricting immigrants who are needed to maintain growth as the US population gets older. Money isn't free to move, it gets stuck, and it gets expensive to invest. We fall into incestuous economy tendencies. You know, just look at what is happening in Europe. England is 6 months away from a hard Brexit, which will mean that property prices will fall drastically, excise duties will rise, making free flow of business completely unprofitable. Cause number 3 is that Europe's economy is going to slow down due to both trade wars, severe cut downs on social benefits, not to mention the extremely populist politics of countries like Italy, Poland, and Hungary, which are focusing on creating even more isolated companies, isolated economies, on monoculturalism, nationalism, who are sabotaging the European Union's one economy policies. Other European countries are considering exiting the Eurozone. Most up-and-coming economies, not to mention developed markets, are already up to their teeth in debt. Commercial and residential real estates are way too expensive in many parts of the world. It's a market correction just waiting to happen. And cause number 4, Roubini says, will be the popularity of high-frequency trading, and this will create flash crashes. Now, high-frequency trading is basically a type of algorithmic trading which is characterized by high speeds, high turnover rates, and high order-to-trade ratios. So it uses high-frequency financial data and electronic trading tools. Yep, so it's basically what trading is all about, where you don't look at the value of the actual project, but you buy whatever, you know, buy it cheaper and then sell it for more whenever the chance occurs. So short-term investing or arbitrage, whatever form you wish to practice it. Now, the danger of this are so-called flash crashes, where you get rapid sell-offs of securities that can happen over a few minutes, and this usually results in dramatic declines and many people not being able to pay out their money. All this fun topped off with the US 2020 presidential elections. Rubini predicts that the Trump administration will introduce a characteristic distraction at this time. This is called a wag the dog scenario, in which the country starts a military conflict in another country. Yes, we've seen this before. Let's say Iran this time, and distracts the population from the deteriorating economy. So obviously this has happened countless of times before. The last time I can remember is with the Bush administration in, say, Afghanistan. This will obviously make things even worse and the global recession even more severe. Not only that, but Rubini reckons that the global economics crisis to occur in 2020 will be even worse than the 2008 one. There will be no more money for fiscal stimulus policies, as you know, they're all already limited by massive public debt. No more cash for unconventional monetary policies or financial sector bailouts. With all the populist movements, all we'll be left with is near insolvent governments. So the next recession is going to hit harder and be longer than the last. Kind of sounds like the World War III scenario, but let's knock on wood. So let me know what you think in the comments below. Make sure to check out the next video in which I talk about how to prepare for the worst case scenario. And thanks a lot for listening. See you next time.